All right. Welcome back to the discount, everybody, the home of common sense trading and investing. I hope you are all having a wonderful extended weekend. It is a holiday today. The markets are closed. So I figured I would get this video out before the markets open so you're prepared for the week ahead. We're going to cover all the major indices, the complete melt up that we've had the past several weeks. People are scratching their heads, wondering what the hell is going on. Before we do that, we post a weekly macro newsletter every Sunday night at 6 p.m. so you can prepare for the weeks, months, and years ahead. This week, we covered probably the most important topic out there. It is the most important 5-minute read for your trading and investing and your financial future. We covered the inverted yield curve. Here is the current yield curve. Here's what a normal yield curve looks like. And we broke down every single market crash since 1965. As you can see, the yield curve inverts, we get a recession. The yield curve inverts, we get a recession. The yield curve inverts, we get a recession. Well, guess what? We zoomed in on all of this and we showed you probably the most important market timing indicator there is. You could see here we break down how and when you could look at getting out of the markets or getting defensive, and look how perfectly the inverted yield curve timed the 2008 top. So head on over here. If you are not subscribed yet, it is 100% free. Head on over to the website. Now, as always, let's do some common sense technical analysis here on the SPY daily chart, which is the S&P 500. So now that we have our Fibonacci retrace in here, what did we do? Well, let's zoom in a little bit so we get a clearer picture. Well, it doesn't look as scary, does it? It looks like a new bull trend. We have a low, a higher low, another higher low, and another higher low. And what did it do? It came up, almost tagged the 50 retrace at 415, came back, did some energy building, came back up, tagged it, consolidated below it, looked like it was going to break out and test its 618 retrace, but guess what? It didn't. So what did it do? It came back down, retested in a double bottom formation, and then ate as much time off the clock as possible to build energy to do what? Go up to that 618 retrace, didn't spend a lick of time there. And now where is it going? Well, for starters, it absolutely wants to go to the 786 at 450. I would not be surprised if it came back in this week to at least retest the 618 again at 430, perhaps even down to the 50 retrace at 414 in super important level. And we also have some gaps here if we zoom in on the chart. Let's say we get a sell day on Tuesday. It comes down in a violent formation, retests the 618 retrace at 430, does one of these things and goes down. Everyone's going to be thinking it's over. Oh my God, it's over. Meanwhile, it's going to fill this gap and retest its very important 50 retrace at 414. What else could it be doing? Well, if we take another trend line, let's draw one right here. Let's clone the same trend line and put it right here. I didn't make this trend line. The market made this trend line, and it's been playing off this trend line within this trend line for quite some time since the October 22 low. So again, could we see that situation where the markets are very overextended, it's exhausted, it comes in, eats some time off the clock, fills this gap, retests this trend line, and then resumes uptrend? Absolutely, we could see that. That would make total sense. The more bearish scenario is if it comes in to this channel once again, and this would be the third time. I typically love third time. So if I see this scenario, I'm going to be buyer of the S&P 500 here, and we should see a nice reaction and resumption of the bull trend off this level right here. Regardless of what it is going to do, the markets are overextended and there is nothing to do with it right now unless you wanted to try and step in front of it on the short side. And we said, I pulled back my statement and said, there's really just no reason to get in front of this on the short side right now. There's nothing amazing to play the short side against. Yes, it came into this level. You could have shorted the 618, but look, it just blew right through. And now the next destination is really that 786 retrace at 450. So let's see what the markets give us this week on the S&P 500 and go from there. Heading on over to the Qs, the QQQ, the NASDAQ, same situation as the S&P 500. We're just going to stay zoomed out on this. Where is it? It's in the 786 retrace. It wants it. It's going to likely get it. They didn't spend all this time shooting up there to not blow through this top right here and get to that 786 retrace. Now, will it happen right away and then we get the sell-off or whatever is going to happen? I don't know. But what I do know is it is likely going to get hit eventually. Maybe they pull back first and we get that scenario before they resumes the uptrend. Let's just wait and see what we get on the QQQ. It's all the same market and they will follow one another. Heading over to the SMH, now this is just absolutely magnificent and it showed you the strength across all of the markets. I mean, this thing blew right through its 786 retrace from high to low and it is now approaching all-time highs. What an amazing move on the SMH. And right now it has a lot of gaps on the downside to be filled. And that is why I say we could likely get some type of pullback here and it would totally make sense. The SMH should come back down to fill its gap, its 618 retrace. If we draw a trend line similar to the one I just drew on the S&P 500, what would this do? It would come in, it would look much more violent. It would come in and tag this trend line, 1, 2, 3. Now, this is the fourth hit. This is something to pay attention to. On the fourth hit, usually I do not like it and I watch for a breakdown, right? So if the SMH is going to break down at this level, it is absolutely going to be an indication that the markets want to sell off a bit more. Obviously, the most bullish scenario is to stay above these trend lines, stay above the 50 retrace, not get into the 382 and the 236. Could we see significant sell-offs into the 236 and some type of double bottom? Absolutely. We don't want to see it get that far. If this is going to continue as a bull trend, you just don't want to see it get that far. Let's see it get off the 618 retrace all of these markets. The SMH, the SPY, and the QQQ. It's all the same right now, except for more strength in the semiconductors and the QQQ. But if we drew those retraces, just watch out for them. We do not want to see anything go below the 50 retrace for an extended period of time if this bull trend is going to continue. Last but not least, let's head on over to the IWM. Now, if this bull trend is going to continue, I want to see the IWM hold up here and hold up well. If not, continue to show strength and break out of this wedge pattern to the upside. What do I mean by that? Well, if markets are selling off and we get some type of pattern here, I want them to start to base out and explode to the upside. I want to see the IWM recapture that $200 level. That would show me absolute confidence in the markets for the time being, and that we could even see all-time highs on the S&P 500 and the QQQ. So this is my favorite market leading indicator. It tops and bottoms before the SPY and the QQQ every single time. And look again, I've been mentioning this for several months now, but look all of 2021. Remember how it just ate time off the clock, faked everyone out, and foreshadowed that bear market correction that we got, while in the same fashion, the S&P 500 and the NASDAQ was actually melting up to all-time new highs, okay? So could this be a situation, and let's clean this chart up, could this be a situation if we're just eating time off the clock in the bearish pattern, right, that most people are expecting to break to the downside? Could we just be doing the exact opposite of what this was, right? This was a breakout to the downside. It faked everyone out to the upside. This could be doing this scenario, right? Let's clean this up. This could be doing this. And then boom, break out to the upside. This is an absolutely fair long trade, traded against one of these lows. And if the markets are going to continue, the IWM should absolutely get back to $200 and $215 level. All right, that's pretty much it for today, guys. We're going to cover Bitcoin and Ethereum in a separate crypto market update. That's how we're going to separate these out. We're going to do crypto market updates on Wednesdays or Thursdays. And as always, a weekend update, getting you prepared for the days, weeks, months, and even years ahead. Again, head on over to that website. It is totally free, and it is life-changing analysis that we spend a lot of time on. And last but not least, come on over to our Telegram channel if you haven't already. We post investing, swing trading, and day trading ideas for our members completely free of charge. That's it for today, guys. I hope you have a great rest of your Monday, and we'll see you on the charts this week.